Hey, Steve Saretsky here, as always, the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, I ask that you hit thumbs up and subscribe. Questions, comments, put those below. Gonna go over a host of thoughts, things that I'm watching for in this market. As always, obviously a huge, busy week, an insane amount of policies brought out. So if I miss any one of those policies, forgive me, but I'm probably well aware of them. There's just so many things to talk on. This is changing on a daily basis. So stick with me here. But first off, obviously we saw the Bank of Canada cut another emergency rate cut, 50 basis points. Again, I said from the get-go in these videos, over a year ago, I said eventually the BOC, probably within the next 12 to 18 months, is going to hit the zero bound. It's whether you have a virus or no virus, we were getting there because as soon as the economy slowed, those rates were going to zero. We obviously got that through a global pandemic, but again, it's not necessarily the pin that ends up coming in to pop the bubble. There's always a new pin. There's always a black swan around the corner. Again, you can go back and look in financial history, whether that was, the terrorist attacks in 2001, subprime mortgage-backed securities blowing up, world wars, etc. There's always some sort of spark. And then obviously, again, when you have an economy that is leveraged and so intertwined, it creates more systemic problems, and we're starting to see those obviously shape up. Hence why the Bank of Canada cut 50 basis points. They're now engaging, officially, not officially, in quantitative easing. The amount of intervention from the Bank of Canada, from the Fed, is unprecedented, and this is basically, we're on our way now to essentially monetizing all the debt. So let's just quickly touch on the Bank of Canada. So they've cut basically down to 0.25%, effectively zero rates. They've said that this is the lower bound. They prefer not to go negative. So I suspect that, my hope is that they don't. We'll have to wait and see. My base case is that they don't go into negative rates, because I think it's been proven systematically that negative interest rates do not work, and they actually destroy the banking system. So I don't suspect that they're going there, but they have engaged in multiple programs, obviously buying up a lot of Canada mortgage bonds in the secondary market as well. They've now brought in the ability to buy up corporate debt in Canada. They are now also intervening in the provincial mortgage bond market. So they're now buying up, because you have to think what's happening. There's basically zero liquidity in large parts of the financial sector. The corporate bond market is basically no bid. The provincial bond market is frozen up. So these guys are having to come in as basically, again, the lender of last resort to basically provide liquidity and buy up all of this debt. I think that they announced the BOC that they were basically going to buy $5 billion of Canadian government bonds or Canadian government debt, $5 billion a week until they see fit. So if you do the math on that, I think it's about $240 billion a year. That's actually more than 2 years worth of government bond debt issuance. What that basically means is they're actually contracting the supply of government debt out there. So basically, in other words, what that means in simple terms is bond yields are going way down. Once we come out of this sort of illiquidity storm that's pushing yields slightly higher, the yields are going basically to zero. What else can we talk about? As I mentioned in last week's video, CMHC is introduced their program, the Insured Mortgage Purchase Program, IMPP, same program they brought in during the financial crisis. Last week, I told you in the video that the program was for $50 billion. They're going to buy $50 billion of mortgages off the bank's balance sheets. Less than a week later, that number is up to $150 billion. And I can tell you that number is going much, much higher, without a doubt. That's how much financial stress there is in the banking sector. That's how much pressure there is to keep their credit taps from turning off. Again, if the credit taps turn off, you have even more significant problems, more unemployment, deeper recession, et cetera, et cetera, et cetera. So they're trying to keep the banks lending. Again, think about this in simple terms. How else do you think banks are allowing people to defer their mortgages for 6 consecutive months if they can get approved for the program? Okay, this all comes at a cost. There has to be support from institutions like the Bank of Canada and like CMHC to basically backstop the banks. And so, yes, I think there's a lot of moral hazard there. I mean, we know that forever there's never been such thing as a free market. It is essentially, to some extent, you could argue it's essentially some sort of basically a bailout of the banking system. Which ultimately, in the ultimate long run, it helps put a floor under house prices. That's again not to say that house prices won't fall. This is a massively deflationary. This is incredibly deflationary. What is happening right now? I mean, people not paying their debts, people not paying their rents, people not getting paychecks. That is a massive deflationary shock. We can talk about in the U.S. what's happening is commercial tenants, Subway, Burger King, Cheesecake Factory, not paying they've come out and said, we're not paying our rent. So these commercial tenants, these commercial landlords are now stuck, not with no income coming in. There's a massive strain on cash flow. Again, that is massively deflationary. And it's basically what's happening now is these commercial mortgage REITs are basically blowing up, commercial mortgage lenders blowing up, margin calls, all sorts of things, and it's just making it even worse because the system, again, was not designed to just hit pause. So again, you can argue the cure to this pandemic is arguably potentially going to be worse than the disease itself. Again, you can argue that all you want. That's probably a topic for another day. But what matters is how governments and policymakers are reacting to this and what the implications are, what the economic implications are. And now we've seen the Canadian government, pumping out $2,000 monthly paychecks to anyone that doesn't fall under EI. If you're a self-employed individual, a contractor, you just apply for this, government gives you $2,000. The BC government will give you another $1,000. And so there's just this free money tree out there where, again, I think it's probably necessary to some extent, but it's creating just perverse behavior. People that were not prudent, that didn't save for a rainy day. Should they be getting free checks? If they should, how much should they get? I think it's certainly up for debate. I'll give you another example. You had the BC government this week, and I believe that the Ontario government, and I think this is eventually going to be Canada-wide. If it's not, it will be soon. BC government coming out and saying there's no more evictions for the next, I think it's 2 months or so. 2 or 3 months, correct me if I'm wrong. You cannot get evicted, permanent rent freeze indefinitely until we see fit. And what this basically does is essentially telling tenants not to pay the rent. You can't get evicted, don't worry about it. So basically, it's up to you if you want to pay your rent or not. If you don't pay your rent, the BC government will cut the landlord personally a check for $500. But let's call a spade a spade. $500 ain't moving the needle for a lot of these rent. So you can imagine if you're hypothetically a landlord, and let's say you own an apartment building in Vancouver. Let's say you own 20 units, and you got 10 tenants that decide not to pay the monthly rent, and all you're getting is a $500 check from the government. That's a massive hit to your bottom line, and ultimately there's going to be individuals, businesses, even with a mortgage deferral, they're still going to be getting behind the 8 ball because that mortgage deferral, again, that interest is still accruing at the back end, basically being added on to the balance of your mortgage. So This is not a completely free cakewalk, so I think there's going to be obviously a lot of financial stress involved. Again, we're getting to a situation where we're basically seeing again a full monetization of the debt. This is happening much faster than I would have believed. If you'd watched any of these videos over the last couple of years, I've been saying that the end game ultimately is complete monetization of the debt, that eventually central banks would probably just cut a check and basically it's essentially a debt jubilee. They'll forgive all the debts. I mean, the Bank of Japan has been well on that course for decades now. They basically own, I think it's 60% of the Japanese government bond market. They own, I believe, close to 60% of the ETF market. And so eventually they're going to get to 100 and they're going to stroke a check. And so I think that's the path that we're on. I mean, you had the Fed's Jerome Powell basically saying in his interview that they have unlimited QE. So I'm going to pull a link to that little soundbite here. So we have a situation where we have basically unlimited QE, but again, it's like now everyone's calling it massive stimulus. Well, it's not really stimulus. It's you're basically patching the hole in the ship, and so yes, the ship won't sink, but it's certainly not going to move any faster than it did. So I wouldn't say it's stimulus. It's what you're doing is you're trying to basically plug the boat from completely sinking to the bottom of the ocean. So basically what we're trying to do right now is stave off a deep recession, potentially. I mean, obviously everyone's talking about depression. I certainly hope that we don't go there. People... from my own personal perspective, I can tell you right now, on the top of my head, I have 3 family members alone that have recently been laid off. So this certainly hits home. I mean, I am certainly well positioned, and a lot of my family members are. So that's going to be fine. But again, you have to think that this is why, financial wisdom has always said, well, don't over leverage yourself, have some cash buffers, financial prudence, et cetera, et cetera. But the thing is, nobody practices that. And, it doesn't matter until it does eventually matters. And we have one of these sort of financial crises, it seems like once every decade. But now, again, we have central banks continuing to print endlessly. So how do I see this all playing out? I mean, I guess that's probably what most people are trying to figure out. I think this is still a massively deflationary event, that you're going to have significant deflation. You are going to have... it's going to be tough to just restart the economic engine. And eventually we will get past this and move on. And eventually, I mean, we know there's massive currency devaluation. Fiat currency is being printed into oblivion. These debts, again, will never be repaid. That eventually, I believe that you're going to have some sort of inflation, whether that, is in financial assets. Again, I think there's going to be a time when you're going to want to be in things like real estate and gold and hard physical assets. I mean, stocks obviously are on the discount now. So there's going to be a time for that, but I think right now is you're in a bear market, you're in a deflationary environment, and that's where I see it. And there is going to be a time, there's going to be, for those that have the cash, those that were prudent, This is going to be probably for some people a once in a lifetime opportunity to buy assets significantly discounted. And again, if you had watched the show, I had preached financial prudence. And, I have to laugh. One of the things I think about a lot is whether you love him or hate him, you talk about Warren Buffett. The guy, everybody made fun of the guy for the last 3 or 4 years because he's underperformed the market. But you look at the valuations, can you blame the guy for not getting extremely long at the highs? And so this guy's sitting on, I think, $130 billion in cash. I'm sure this guy is going to have an all-you-can-eat buffet of opportunities in front of him. He hasn't pulled the trigger yet, but certainly be watching to see. But I'd imagine that this guy's going to have an absolute heyday, and over the long run, is going to do obviously much better than the market. So kind of watching for that. Watching for real estate. I think one of the things people want to ask me on real estate, where I see this going, I think it's way too soon. Like I said, I'm going to be doing some analysis for some policymakers here, so I'll keep you updated on some of the data that comes through. But I think if we can look elsewhere, China, for example, a very real estate centric country. Every basically developer there, China's, as I talked about this in my video about a month ago, China's second largest property developer that has 250 some odd projects under construction, discounted new construction, pre-sale prices on all their projects, 250 projects across the country, by 15%. And that's their largest developer. So and they were getting more and more reports that the discounts from most developers in China are ranging from about 10% to 20%. So does that happen here? I think it's certainly probable. I think the probabilities are significant. Well, again, we'll have to wait and see. It's much too soon to draw that conclusion. In the U.S., we've seen mortgage applications are down about 30% for this past week. So you're starting to see, obviously, and I can tell you in Vancouver, the sales have dropped off, so have the new listings. And so, we'll just have to wait and see how that plays out. But I think at the end of the day, right now, cash is king. For those that want to sell and liquidate and sit on that pile of cash and wait for some opportunities, seems like a pretty good opportunity to do so if you've built up a significant amount of equity in the space. Or you just ride the storm. But I think it's creating this really weird situation. For example, if you're trying to sell, if you're trying to sell an investment condo in Vancouver, you have a tenant in there right now, and you're trying to sell it. Well, it's first of all, you can't evict the tenant, so the new guy basically has to assume the tenant, but then we're not even sure if the tenant's actually going to be paying his rent. Or is he not going to be paying his rent? Because, obviously, the unemployment rate is going to spike. It already has. So I just don't understand how this is all going to shape out. We heard from mortgage lenders in Canada that over 200,000 applicants have already applied for mortgage deferrals. That number is going to go way through the roof. Scotia's CEO came out and basically said that our phone lines were so busy we couldn't actually answer the phones for a lot of these people. So people are obviously stressed financially. The government handouts are obviously going to help stem the boat from sinking, but it might not solve the problem completely. That's my view. And again, if you have a different view, if you have any thoughts, that's what the comment section's for. So I think that's all I got for this week. Ton of policies. I think people are getting hyped up on the stimulus, and not being cognizant of the mass layoffs and the time that it's going to take to get us back into full capacity. Even in China, they're just getting back onto the streets. Orders are just starting to kind of slowly. New orders in factories in China, for example, are just still way off. I mean, obviously, all their trading partners are basically on quarantine. So, I think this is going to take some time to recover, and I certainly understand the argument that, I think that realistically, the cure might ultimately end up being worse than the disease itself. That's not to dismiss that we shouldn't be social distancing and quarantining. I just think it's an interesting discussion or thought to consider. But obviously no policymaker or government is going to go out there and sacrifice lives for the sake of the economy. But I think you could ultimately have a lot of suicides from people losing businesses and going bankrupt, and the stress and the anxiety that it's going to create when people get laid off their jobs. So that's all I got for this week. If you enjoyed that and you value entertainment, hit thumbs up and subscribe.